Hey, what's up, stock compounders? Brad here. So today I want to talk about the book Richer, Wiser, Happier by William Green, How the World's Greatest Investors Win in Markets and Life. And it's really just one chapter that I want to get into in Richer, Wiser, Happier. And that's chapter 6. It's the chapter on Nick Sleep. Nick Sleep, I'm sure a lot of you have heard from Mohnish Pabrai, was really the one that inspired Pabrai to totally pivot his whole investment approach for Pabrai funds. So there's just a ton of great information in chapter 6, the one covering Nick Sleep and his partner Zachariah. So I want to give my big five big takeaways from chapter 6. Hopefully they inspire you guys to read this chapter. Hopefully it inspires you to read the Nomad investment partnership letters. So let's dive into it. My first big takeaway from chapter 6. So Nick Sleep and his partner with Nomad Fund, they were inspired by Zen and the art of motorcycle maintenance. Okay, it's a book that really inspired Nick Sleep. They set out to generate superb long-term returns in a high-quality way. Okay, strip away the noise of Wall Street. Treat their investing partners like business partners with a generous fee structure, and get to the essence of what matters for generating long-term returns. So their whole goal with the fund was to turn £1 into £10. All right, they're UK based, so they think in terms of pounds. But they're solely focused on generating superb long-term returns. So that's the first one. High quality. All right, focus on high quality ways of doing things. The second big takeaway, spend time on what matters, okay? And ignore all of the noise. There is so much noise in Wall Street. So what actually matters? I'm going to read a little section here for you. How did they spend their time, right? Nick Sleep and his partner. We just read annual reports until we were blue in the face and visited every company we possibly could until we were sick of it. When they analyzed companies and interviewed CEOs, Sleep and Zachariah probed for insights with a long shelf life. They sought to answer such questions as, what is the intended destination for this business in 10 or 20 years? What must management be doing today to raise the probability of arriving at that destination? What could prevent this company from reaching such a favorable destination? They referred to this way of thinking as destination analysis. So, it's not the typical stuff you hear on Wall Street. What is the quarterly earnings, right? Did they beat earnings? Did they miss it? We're thinking in decades here, not weeks or months or quarters. Sleep and Zachariah focused on the inputs required for a business to fulfill its potential. They wanted to know, is this company strengthening its relationship with customers by providing superior products, low prices, and efficient service? Is the CEO allocating capital in a rational way that will enhance the company's long-term value? Is the company underpaying its employees, mistreating its suppliers, violating its customers' trust, or engaging in any other short-sighted behavior that could jeopardize its eventual greatness? So that's the second big takeaway. Spend time on what matters. And those are some of the things that mattered to Nick Sleep and Nomad Investment Partnership. The third big takeaway, wait for the perfect pitch, okay? Don't compromise on investment quality. If there's not an investment in front of you that's really compelling, just wait, okay? And here's an excerpt about that from Nick Sleep. So they made it clear that they would return money to their existing shareholders and turn away new investors if Nomad's size ever became a hindrance to its performance. That's incredible. It's so rare to hear about funds doing that. Most funds operate on the idea that the more assets we can have under management, the more money we're going to make, right? Because they charge those fixed fees up front, 1 or 2%. Not true with Nomad partnership. They repeatedly closed the fund to new subscriptions starting in 2004. This is just 3 years after they opened the fund. When they managed about $100 million, a paltry sum by industry standards. They reopened only when they could find sufficiently alluring opportunities to deploy additional cash. So they weren't willing to compromise investment quality to build a bigger and bigger fund, to take more and more money from investors. Huge, huge point. So that's waiting for the perfect pitch. The fourth big takeaway, find your sweet spot. So let's talk about the sweet spot that Nomad found. So they began to wonder what characteristics account for the success of companies with unusually long shelf lives, because they wanted these long-term compounders, right? They wanted to put money into an investment and have the management team compound that money for them. In order to do that, you need to invest in businesses that have that staying power, that corporate longevity. And they would reach the revelatory conclusion that one business model may be more powerful than all the rest. Their term for it is scale economies shared. Okay, and if you jump into my Twitter, I recently posted about, what is scale economies shared. There's a great blog post out there. I actually just messaged the guy who wrote it. He's also on Twitter. But it goes through 3 different businesses and breaks down their business models. They all have this scale economies shared business model. The company that introduced Nomad to this model was Costco, okay? An American discount retailer that embodied everything they sought in a business. Sleep and Zachariah saw underappreciated strength in Costco's fanatical focus on delivering value to shoppers. At the time, its customers paid a $45 annual membership fee, which gave them access to warehouses filled with dependable products sold at the lowest possible prices. Costco marked up its goods by no more than 15% above cost, while a typical supermarket might mark up prices by 30%. Members had no need to forage elsewhere for bargains because Costco treated them so fairly. So you get that loyalty there. The company could have jacked up its prices and boosted margins, but that would have jeopardized its members' trust. So playing the long game, not the short game. Satisfied customers kept returning and spending more money in its stores, thereby generating enormous revenues. As the company grew, it negotiated better deals with suppliers and kept driving down its famously low costs. Costco then shared these economies of scale with consumers by lowering prices even further. Sleep and Zachariah estimated that Costco customers saved $5 for every $1 that Costco kept for itself. Okay? Think about the power of that. The effect of this policy of self-restraint was a virtuous cycle that Sleep summed up like this. Increased revenues beget scale savings, beget lower costs, beget lower prices, begets increased revenues. So it's this virtual cycle that gets stronger and stronger as the company gets bigger and bigger, as the company grows. So that's find your sweet spot. For Nomad, it was these businesses that had the model of scale economies shared. And then number 5, stick to your sweet spot. Okay? Once you find it, stick to it. So we're going to talk about some scale economies shared, and then I'm going to tell you what businesses are owned personally now that they've closed the fund back in 2014. What businesses are owned personally by both Nick Sleep and his business partner. So they got this conviction that nothing matches the might of the scale economies shared model in fostering corporate longevity. Okay. When they studied Walmart's annual reports from the 1970s, they realized it had much in common with Costco. Likewise, durable winners such as Dell Computer, Southwest Airlines, and Tesco all followed a similar path. These formidably efficient firms kept costs low and passed most of their savings back to consumers, who reciprocated by doing more business with them. In the same vein, Geico and Nebraska Furniture Mart, two of Warren Buffett's favorite businesses, continued to drive down costs as they grew, enabling them to save their customers so much money that it became increasingly difficult for rivals to compete. Henry Ford pulled off a similar trick a century ago, harnessing the benefits of assembly line production to drop the price of a Model T touring car from $850 in 1908 to less than $300 in 1925. Once Sleep and Zakaria understood the magic of this one business model, they made it the overarching focus of their fund. Okay? So there's that focus that's critically important to investing. Knowing what your sweet spot is and sticking to that sweet spot. So let's talk about what they own now. Okay? So Nick Sleep owns in his personal portfolio 4 businesses. Okay? Amazon, Costco, Berkshire Hathaway, and ASOS, which is a UK online retailer. Those are the 4 companies owned by Nick Sleep as of 2020, when he was last interviewed by William Green. Now, his business partner, Zakaria, or Zakaria, I think it's pronounced, Zakaria, same first 3, Amazon, Costco, Berkshire Hathaway. Zakaria also owns Boohoo, Boohoo, which is another UK online retailer. I believe they're both clothing retailers in the UK. So, yeah, it's pretty impressive, guys. They each have a 4 stock portfolio. And back in 2018, for Nick Sleep, Amazon, it became 70% of Nick Sleep's net worth. And that got Nick Sleep a little bit nervous, okay, to have one business responsible for 70% of his net worth. So he made the uncomfortable decision back in 2018 to sell half of his Amazon stake. It was around $1,500 per share when he sold half of his Amazon position. And I think it took more than a year for Nick Sleep to figure out what to do with that cash that he now had from selling off his Amazon position. And I think it was probably sometime in 2019 he decided to put that cash into ASOS, ASOS. So I'm probably going to be digging into ASOS and Boohoo in future videos, just try to get a sense for what they might be worth on a discounted cash flow valuation. So keep an eye out for those. But you guys, you need to read this book. Do yourself a favor. Read this book. If nothing else, just read chapter 6. Because, yeah, I summarized it here, but I took 9 pages of notes on chapter 6. I was only able to cover, a tiny fraction in this video. And William Green is a fantastic writer. He's got a journalistic flair, really keeps the reader pulled in and interested. So, I mean, it's a fantastic book. I've been listening to it on Audible. Obviously, you can also buy it in print if you prefer to read it that way. But you guys check out this book. It's fantastic. And yeah, thank you to Mohnish Pabrai for recommending the book. Pabrai is featured in chapter 1, and it's fun to hear some of his stories about his life that I've never heard before. So those are probably the first 2 chapters I'd read, but I'm going to finish the whole book, and I'm sure there's a lot more great stuff in there. So anyway, guys, hope you enjoyed this summary of Chapter 6 on Nick Sleep and Nomad Investment Partnership. Yeah, let me know what your big takeaways were, or if you haven't read it yet, how excited you are to dive in to this book. So that's all I've got, guys. Thanks for watching. I'll see you in the next video. Take care.